Thanks so much for tuning into this earnings conversation with the management of KPIT. They reported a strong and an inline Q1 revenue number, constant currency growth, 23% YOY, about 6% quarter on quarter. The EBITDA margin surprised to the upside at about 19.4% versus the Bloomberg consensus of about 18.7%. Let's talk about the quarter and the outlook ahead with Mr. Kishor Patil, co-founder, MD, and CEO of KPIT. Mr. Patil, great having you. Hope all is well.
Good, very good. Good morning to you.
Yeah, good morning. What stood out in the quarter for you, Mr. Patil? There were a few highlights. I'll explore them. But what stood out in the quarter for you, per se?
So naturally, both growth as well as margin was a little ahead of what was expected, and which is pretty good. I think some of the programs which we were working on started a bit early, and that allowed us to really ramp up well. What also helped us during this, actually, if you go a little bit to one level down, is a little bit of a ease out on staff environment. Actually, specifically of our key staff, as we call it, top lock, as we call it, and we don't share the numbers exactly, but top lock attrition as well as the overall attrition went down. But specifically on the top block, attrition went down substantially. And we see that trend even going into the next quarter. That allowed us to bit of a ramp up and deliver better and engage well with the clients. That really helped us. That to some extent, if you ask me, that I would pick up that as one point, because the growth and margins are there always, but the staff environment has been quite challenging for a few quarters. So this was a good surprise.
Yeah, also because not too many companies, whether in the ER&D or IT services, are saying this. So what is working there? Also because I see that you delivered a margin upside despite that 11% quarter-on-quarter headcount increase.
Yes. Actually, it has been a long journey for us. We have taken a long journey for ourselves last 4 years on what we call what is our employee proposition, and that is what we call is as a place to grow. And before pandemic, and even of course the first year of pandemic was same for everyone, but I'm saying when the things were normal before pandemic, we had gone to a single-digit attrition. And that was probably one of the best in the industry. Naturally, things change. Everybody will change after a year, and then the scenario change everywhere in India, outside India. But we continued with our pursuit of that proposition. We started to really focus on what we can do more, what finer elements. How we make it as a tech company, how do we value our technology talent more and better, how do we allow the growth path to all our employees. So we really worked on these areas. Communication we improved. It was a bit of a problem during the pandemic. To whatever extent we increased that too. I cannot immediately say that this is how the long-term trend is. But at least it happened first time in the last 6 quarters, right? And it's showing the same trend going into the next quarter, which is promising.
Yeah, which is quite terrific. Now, my question is, you delivered a 6% revenue growth. There is an upside on margins, and yet you maintained the FY23 guidance, 18 to 21%. Are you accounting for the possibility of some surprises, or is it that let's under-promise, if we can over-deliver, nothing like it?
I think, if I may say, there are very few companies who gave outlook for the year. I think you know the environment, how it is.
Sure.
So we were, if I have to say, one of the brave enough to go out and give a reasonable right outlook for the year. And a lot of people question me on that. Are you okay? You have already factored the issues, this, that. So I think I would say we have taken our best guess and estimate for doing that, and we'll wait for it, And typically there are increments which have happened during this phase. There are currency movements are something which you cannot tell right now. Some of the macro environments, we don't know, right, how it pans and what impact to some extent it may have. We believe our clients are very committed to these long-term programs, but a few tweaks here and there. That's why we generally have a strategy once we give an outlook, which few people have given, that we wait till Q3 to relook at what we want to do.
Fair call, understandable. Okay, now deal wins, $155 million new deal wins, I believe, book-to-bill ratio 1.72. You've written a lot in the presentation about two things: one, multi-year deal wins, and middleware deals. Now, tell us about the nature of the wins, one, and also a bit of a thought on whether the the components, like just either the order mix or the ask from the customer about the work that you're doing, or the capability-led changes that might be happening from 2 years ago, or pricing changes that might be happening from maybe 4 to 8 quarters ago. Tell us a bit about the whole deal wins and the order book per se.
All the client, we continue to say that they are going through the transformation. This transformation is of at two levels. If you look at the immediate thing, I think there is a big shift towards electrification. Everybody, including India, you see that. But naturally, it is very pronounced in the Western world. So that's happening. US was a bit, I would say, lacking, but it is also catching up absolutely aggressively. So that is a sacrosanct part. Now, some of them were a little behind, some were ahead. We fortunately work with the companies who had started earlier. So that is one part. The second part is about changing in the business model. I mean, right now, from selling cars to people are moving towards selling services, having a direct connect with the consumers, and providing them a more experience. Now, in order to do that, they have to really change the architecture of their software. It has to be more integrated. It's not a trivial part. In my opinion, this will take a couple of rounds to really get it there properly. So next 7-8 years, we see this as a big driver. Now, this is not trivial. So you need a lot of understanding of architecture. You need a lot of competence in the middleware space, multiple things. You need understanding of different domains and across the domains, because many of those things are across the domains. So we, as you know, over the period, now KPIT is probably the largest, arguably the largest independent player in automotive software, specifically new generation software. Apart from that fact that the overall understanding of domain, we are one of the very few companies other than automotive themselves who has the full understanding. And we have been working on some of the vehicle networking, middleware, this area for last close to 20 years. Now, that allows us, that gives us a very good seat at the table. And if you look at, I think I was just talking to 75% of the programs which are happening in the industry, KPIT is very, very much involved in these programs and as a lead player. And these programs are typically anywhere between 3 to 5 years. So that gives us that position.
Are you deepening that 75%, or are you trying to expand into the other 25% as well?
I think our focus is always deepening, and we have a clear strategy of T25. So we'll focus on our clients, and naturally we'll look for deepening within those. So that is a very clear strategy for us.
One wrinkle on the banana peel, if you will, that people are pointing out is that in an inflationary environment, especially when battery pack prices and the raw material prices for those batteries are moving up, and the customer appetite may be X as well because of the overall economic sentiment, would companies try and squeeze, as critical as this part is, would companies try and squeeze pricing with you, because it's almost impossible to squeeze pricing on the raw material inputs?
See, they have to make a judgment in terms of, see, these are also very critical programs. If you get a little bit of, if you get it wrong, it will cost you significantly. So having a credibility with the player is important. Having a trust with the player, your partner is very important. And as our focus is very clearly in T25, we are very transparent about the challenges also, right? Because the staff cost, as you know, not only in India, but outside India has gone up. So the transparency is there. So naturally, they have to do their bit, we have to do our bit, and we have to improve the productivity, we have to improve the reusability, we have to improve the automation, all those factors. And, that has to work. Ultimately, we have to see a situation where overall their cost for a program is similar and not going up significantly or a little bit. And our margins and our costs are taken care of, and we are in a position to take care of our employees.
Sure. No, but Mr. Patil, just sorry, one follow-up there. If not on existing work pricing, is there some renegotiation around the quantum of spend on the autonomous vehicle R&D per se? I mean, they may not want to discontinue what they're doing or squeeze on pricing here, but they may want to go slow on futuristic R&D currently, simply because the raw material cost and the battery cost will certainly be squeezing the EV companies or companies which are in this space.
Let me just say it as I see it.
Sure.
Right now, there are 2-3 things. First is we have not heard it, at least. Let me be honest with my clients. The second is, as a KPIT, we are working on most are the production programs. And so those are not pure R&D programs. These programs are not R&D programs. They are the real programs. And those are very critical to the client. So, see, you cannot say anything, in the environment. You have to respond, you have to work with the client, you have to make it a win-win. But this is how we see it. And if things change, we will have to respond along with our client to make it work.
Okay. There has been a leadership. So thanks. All I'm getting is that you are not seeing it as of now. If it happens, of course, we'll talk about it. Leadership changes at Volkswagen, does that, I know you don't normally comment on specific clientele, but does this have any implications per se? Can you talk about it?
If you look at the automotive industry, last 5 years, you look at it, there are the changes, and specifically you talked about the specific client. There have been many changes in the client, but I think the strategy is well defined for all the automotive sector. I think I cannot see impacting either their spend or anything from their perspective. Few changes, organizations restructuring, etc., can happen, but I think that's a part of the normal life. It happens every 6 months, 12 months for every organization. Yeah.
Okay, fair call. Mr. Patil, one final question. I've taken 15 minutes of your time, but just one final question. One of the comments in the presentation was that the relentless focus over the strategic clients continues to yield great results, resulting in larger strategic engagements. Can you describe what do you mean by both large and strategic engagements? Is the tenor and is the quantum of the deal that is you getting from the client, has it gone up over the last 24 months?
Yeah, absolutely. And I mentioned about it. I've been talking about it for over a year now, that our deal sizes have gone up. And we may or may not announce every deal or that, but all our engagements are, I mentioned to you, largely all the new engagements are 3 to 5 years kind of a spread, if not more. Some of them are a little longer. They are over 3 years. So naturally it becomes, significant amount.
Okay. And you reckon this will continue? Because I heard you say there are 2 rounds, you are well placed for 7-8 years. If indeed the strategy and the deal making is going up, you think this trend will continue?
Yes, absolutely. That's what that has been our thing, that world of mobility is going to change maximum during next 10 years when we started. That's what we said 2 years back when 3-4 years back when it transformed. That's what we spoke. And we believe that the innovation will be much higher and the changes will be much higher in this decade than any time in the past decade or even the century.
Well, in which case you are in the right space, Mr. Patil. Not that you need me to tell you that, but congratulations on a solid quarter and all the best for the quarters ahead.
Thank you so much. Thank you.
The pleasure was ours interacting with you, viewers. Thanks for tuning in.